Recording in progress. Ladies and gentlemen, good afternoon from Jakarta, Indonesia. Welcome to the International Sustainability Standards Board ISSB outreach in ASEAN, Asia, and Oceania. This webinar is proudly organized by the ASEAN Federation of Accountants, or AFA, the Asian-Oceanian Standard-Setters Group, AOSSG, and of course the ISSB. My name is Auki Pratama, Executive Director of AFA, and I will be your host today. On behalf of the organizers, it is an honor for me to welcome you to this webinar. Today, we are expecting more than 300 participants from jurisdictions in ASEAN, such as Indonesia, Malaysia, Myanmar, and Singapore, as well as Asian Oceania, including but not limited to Australia, New Zealand, Japan, Sri Lanka, and India. It is indeed a fair representation of our diverse region. For AFA, it is the third webinar under our sustainability agenda for 2022. A very important one, of course, in light of the developments in the space of sustainability reporting in the last 12 months, especially with the establishment of the ISSB and publication of the board's first consultation on the ISSB's exposure draft IFRS S1 and exposure draft IFRS S2. The Asia-Oceania region, of which ASEAN or Southeast Asia is a part of, represent an important group of stakeholders of the IFRS Foundation, ISB, and of course the ISSB. AFA has a regional network of more than 200,000 accountants, members of ASEAN Professional Accountancy Organisations, supported by a global network of associate members with close to 3 million members worldwide. The AOSSG, of course, is an important grouping of 27 accounting standard setters in the Asian-Oceania region, bringing with them a collective expertise and understanding of key reporting issues in the region. We certainly hope that today's webinar can serve as a platform for stakeholders in the region to hear from and engage directly with the ISSB. More importantly, to ask questions and share your preliminary feedback to the drafts. Ladies and gentlemen, before we begin, please allow me to highlight the following housekeeping matters. So panelists and participants, please kindly keep your microphone on mute unless you are invited to speak. And when asked to speak, please kindly unmute and then remute. Participants, please post your question via Zoom Q&A function throughout the entire session. These questions will be addressed during our panel discussion later. And the Zoom chat function should only be used for operational and technological inquiries only. Please kindly refrain from using the raise hand function. Please complete our post-event survey and provide your feedback to our webinar today. A link to the survey will be provided to you after this webinar. For your information, this webinar is being recorded. And last but not least, presentation slides will be provided after the webinar. Okay, ladies and gentlemen, without further ado, let us start our session with welcoming addresses from our distinguished guests, leaders of our profession in the region. First, let us welcome AFA President, Mr. Vorawit Jantanakul, who will deliver his address on behalf of the Federation.
Leaders and members of AFA and the AOSSG, distinguished panelists, guests, ladies and gentlemen, greeting from Bangkok, Thailand. On behalf of AFA, I am pleased to welcome you to our webinar, proudly organized together with the AOSSG and the ISSB. Today's webinar is an important part of our sustainability agenda for 2022. As a regional body for the ASEAN Professional Accountancy Organizations, one of our strategic priorities is to support adoption and implementation of international standards in the ASEAN jurisdictions. While IFRS accounting standards have been widely accepted in the region, sustainability reporting is still growing in acceptance and practice. AFA understands the importance of building our stakeholders' awareness toward sustainability. Our sustainability agenda focuses on different aspects of sustainability, providing ASEAN stakeholders opportunities to hear the latest updates from international experts. Ladies and gentlemen, the ISSB consultation on the proposed disclosure standards is an important part of our journey towards globally accepted sustainability reporting standards. Today, webinar is an excellent opportunity for the ASEAN, Asia and Oceania stakeholders to hear firsthand from the ISSB. More importantly, to share our view and inputs to the standards. Alpha recognizes the importance to provide an opportunity for our stakeholders to engage with the board. This would also help in our efforts to promote the board and its limits to the ASEAN stakeholders. We understand the importance of getting the stakeholders' support and participation in this sustainability journey. I certainly hope that everyone will take this opportunity and actively provide your comments to the approacher drafts today. Alpha will continue with our commitment to work with our member organizations, partners, and stakeholders to promote the adoption and implementation of international standards in the ASEAN jurisdiction. Thank you.
Thank you, President Warawit, for your address and for particularly highlighting the importance of today's webinar as part of our ongoing efforts to promote the ISSB and its remit to particularly the ASEAN, Asian-Oceanian stakeholders. Thank you for that, President. Next, I would like to welcome Chair of the AOSSG, Mr. Nishan Fernando, to deliver his address. Chair Nishan.
Thank you, Oki. Good afternoon to all of you. Emmanuel Faber, Chair of ISSB, Sue Lloyd, Vice Chair of ISSB, Warawit Janathanakul, President, ASEAN Foundation of Accountants, Oki Pratama, Executive Director, Tim Kasim and other technical staff of IFRS Foundation, panelists, distinguished invitees, participants, ladies and gentlemen. It gives me great pleasure and privilege to address you at this historic moment of inaugurating this outreach program, jointly organized by ASEAN Foundation of Accountants, AFA, and Asian-Oceanian Standard-Setters Group, AOSSG, and the International Sustainability Standards Board. AFA and AOSSG have many things in common, including few common jurisdictions in their memberships. I hope that the relationship originated between AFA and AOSSG will continue in the future to offer many more programs to enhance the standards of the accountancy profession and quality of reporting in the respective regions. This outreach program is aimed at discussing the first two exposure drafts issued by the International Sustainability Standards Board recently on disclosure of sustainability-related financial information and on climate-related disclosures. 2 decades ago, at the beginning of this century, there was a strong need for high quality and globally comparable financial information for the investors to make investment and capital allocation decisions. This need gave birth to IFRS Foundation and IASB, who are instrumental in developing IFRS accounting standards. Now, after almost 20 years, entities in about 150 jurisdictions use IFRS accounting standards in financial reporting, with which the issue of information quality has largely been overcome. Today, the capital markets are required to play a key role in reaching net zero through allocation of capital to projects. For that to be a reality, sustainability information needs to be produced with the same rigor, assurance of quality, and global comparability as financial information. In this backdrop, we welcome the initiative of IFRS Foundation to set up ISSB and bring all institutions who had been working on various aspects of sustainability onto one table. They will develop the sustainability standards, which are expected to form a comprehensive global baseline of sustainability disclosures. The information so disclosed will assist the investors to evaluate how companies are responding to ESG issues and thereby assess enterprise value and make investment decisions. As stated in the conceptual framework for financial reporting, general purpose financial reports also provide information to help investors estimate the value of the reporting entity. Therefore, financial reporting and climate and sustainability disclosures have now become two sides of the same coin, even though they were quite distinct until a few years ago. Accordingly, the end objective of IFRS Accounting Standards and IFRS Sustainability Standards is common. Therefore, I don't think that we can detach these two sets of standards completely and use them in watertight compartments. An effective connectivity between the two sets of standards is important. For financial reporting to be more useful, sustainability-related information must complement the financial information. So the two have to happen together. It is a key that the standard setters, advisory groups, preparers, and users and all other stakeholders will take a holistic view of these two sets of information. AOSSG will support the sustainability initiative and will engage in supporting and contributing to the work of ISSB as we have been doing it with IASB. We will continue to deliberate how the sustainability aspect should be dealt within and around AOSSG when more information about ISSB work plan is known. I also hope that we would be able to strengthen our relationship with AFA and would engage in more joint work in the future. While thanking AFA for inviting AOSSG to be engaged in jointly organizing this event, I would also take this opportunity to thank AOSSG members, IFRS Foundation, and ISSB for their continued support. I wish that all of you will have interesting deliberations over the next couple of hours in this webinar. Thank you very much.
Thank you, Chair Nissan, for that comprehensive address. And AFA certainly recognized the AOSSG's role as a grouping of standard setters in the region and appreciate the opportunity to collaborate with the group. We look forward to continuing this excellent collaboration with you and the group. So thank you for that, Chair Nissan. Finally, it is an honor for us to welcome Chair of the ISSB, Mr. Emmanuel Faber. Emmanuel, welcome. Thank you for allowing us your precious time to be here with us today. I know the last few months in particular have been, as expected, extremely busy times for the board.
Yes, thank you very much, Auki. Thank you for welcoming me today, this afternoon, with all of you. Greetings from Paris, actually. And, you know, I'd like to really thank President Voravit and Chair Nishan for their forceful messages of support to what we are trying to do. And I would like to underscore this very particular moment for me to engage personally with all of you and your community of business and finance professionals in the region. Just to say that probably the four most eventful period of my or years of my professional life were spent in the region. I was I've been working and living in China, Indonesia, Singapore, visiting numerous countries in the region for 4 years. 15 years ago, traveling from Japan to New Zealand, but also spending a week every month in Jakarta and many other places in Indonesia. And that took me up to the northern, rural, poor areas of Bangladesh. So I have to say that I have your region is very dear to my heart, and it's incredible for me to engage for the first time in my new capacity as chair with your community, because I've seen the incredibly inspiring development of the region. Of course, faced with inflation and commodity issues and etc. and governance, but incredibly inspiring spirit of growth and development and optimism despite all the challenges in the region. And I certainly look at the ASEAN community with more than 600 million people there as a thriving one for the demographics and the development of the future. And so is the Indian subcontinent, and with giants like China here, and the incredible richness and breadth of diversity of economies around there. And so for us, and for me now leading the ISSB with this vision that we are here as Chair Nishan was alluding to create a comprehensive global baseline of standards on sustainability matters, making sure that what we do is relevant for the further development and the sustainable development of economies in your region is absolutely fundamental. It's fundamental because of the demographics, fundamental because of the economics, but also because when it comes to sustainability matters, there is so much that is both critical and on which the region can contribute to the rest of the world. And I certainly see myself and my colleagues, responsibility to ensure that when we say global baseline, it is truly global. And this is where really the input of your organization, both FAA and AOSSG, has been instrumental, as again was reminding of when the IFRS Foundation was started. And there has been a long-standing relationship, very productive and important relationship for the IFRS Foundation and the IASB. As my dear colleague Sue Lloyd would remember, I really hope that this is just the start of a strong collaboration between ISSB and your organizations, because we absolutely need your input. As Oki, you are kind enough to mention, this has been a very, very active couple of months and several months for us. I think we've done our best to adjust to the momentum of those global conversations and regional conversations taking place around sustainability disclosures, and the importance for capital markets to be able to be in sync with the needs for transitions in many economies for sustainability. And so, this is an important moment for us, as we are now in the middle of the consultation for our exposure drafts. And I'm grateful to my colleagues, Sue and Tim, to be able to really spend quality time interacting with you today in this webinar. And just, want to say how important this is for us, how important it is for me to have that conversation with you today. So thank you again for welcoming us at the moment where we have just announced yesterday that in addition to Sue Lloyd, the vice chair, and myself, we have just recruited through the appointment by the trustees of the foundation our 4 inaugural additional members, one of them coming from your region. And with that, we are very comfortable now that we will be quorate in the next several weeks and we've announced that the first inaugural meeting of the ISSB board will take place in Frankfurt in the third week of July now. So with that, I wish you all a productive discussion, and I would also like to say I would like to thank our dear trustee Kono-san from Japan to be closing that working session with you all. Back to you, Oki, and thank you.
Thank you, Emmanuel, for your inspiring address and kind words for our region. I think we will certainly continue with our efforts to encourage our stakeholders to participate and also contribute to the board's consultation, and to make sure that the voice of the ASEAN, Asian-Oceanian stakeholders are represented in the board's deliberation on the standards. So once again, thank you for your time, Emmanuel. Ladies and gentlemen, today is an important milestone in our region's journey towards promoting the importance of sustainability reporting. So to mark such a occasion, I would like to invite Chair Nishan, Chair Emmanuel, our moderator, guests, and panelists, perhaps to kindly turn on your video for a quick group photo. So this is such an important time for us. I think it would be good as well for us to take a quick photo to record this memory as part of our journey together in our sustainability journey. So again, everyone, if you could please turn on your camera, please. We're going to take a quick group photo on my cam. Okay, everyone ready? Okay, let's take a quick group photo. 1, 2, 3. Okay, let's take another one. 1, 2, 3. Okay, thank you, everyone. Thank you. Okay, ladies and gentlemen, to kickstart our discussion, let us welcome our 2 ISSB representatives who will deliver a presentation on the ISSB, the 2 exposure draft, as well as the board's next steps for this consultation. I understand that there will be several poll questions as well included in the presentation, so I will urge all of you to participate and provide your responses to the questions later. First, we have with us the Vice Chair of the ISSB, Ms. Sue Lloyd. Well, I'm sure many of you are familiar with Sue, either through her long-standing association with the IFRS Foundations, that includes her role, among others, as a member and Vice Chair of the IASB and Chair of the IFRS Interpretation Committee, or, of course, in her current role with the ISSB, where she initially played a leading role in the establishment of the board from 2020, including as a member of the Technical Readiness Working Group. And I believe Sue has been very busy attending many consultations in the last few months. So we are indeed grateful for her to be here with us today. Welcome, Sue. And together with Sue, I would also like to welcome Mr. Timotheus or Tim Kasim. Tim is a technical staff of the ISSB and happened to be a fellow Indonesian, actually. So he's part of the technical team developing the ISSB's draft IFRS Sustainability Disclosure Standards. He was previously an associate researcher at the Climate Disclosure Standards Board, CDSB, that consolidated with the IFRS Foundation in February 2022. And welcome, Patim. So without further delay, Sue and Tim, I think the next 30 minutes are yours.
Excellent. Thank you so much. And I'm really hoping that Tim's going to be in control of the slides here, because I'm much better at accounting and standard setting technical than IT technical. But I'm really delighted, following on from Emmanuel's comments, to be seeing you, unfortunately, only on a screen, but very much see many familiar friends and faces on the screen. And it's really delightful in my new role. A wonderful part of staying at the foundation and changing my role is I don't lose all my friends and relationships I have developed over the years. And I'm very much looking forward to when we can meet again in person. But for today, nice to be talking to you, even if it is virtually. So what Tim and I want to do today is really to give you an overview of the exposure drafts that are out for comment today. And as Emmanuel said, the thing that I'm saying to everybody, wherever I'm talking about these proposals around the world, is we're particularly interested in getting a really global perspective in terms of these proposals. We really want to make sure that these proposals work for everyone around the world so that we can really develop this global baseline. So understanding the perspectives of those from emerging economies is something we're particularly interested in. And I know you have a very diverse region, but we're hoping that one of the things that we will benefit from your input is helping us with the emerging market side of things. And so really looking forward to this discussion. So with no further ado, if we move on to the next slide. And then the next one. So what I want to do is set the scene, and then I'm going to get Tim to do the hard work of actually talking about the technical content of the exposure drafts. So as you all know, we were really delighted in November last year when the IFRS Foundation trustees announced the establishment of the ISSB. And this had followed a consultation where we had overwhelming support from our stakeholders around the world to the idea that we needed a set of global standards on sustainability to meet investor needs, and that the IFRS Foundation should step up to help with this, building on the wonderful work of the International Accounting Standards Board. So this was announced in November last year, and I say to people, it was probably the worst kept secret in the world. I don't think it was news when we announced the establishment of the board at COP26. But I think what was news, and was good news, was the fact that in establishing the new board, the trustees were taking the opportunity to reduce some of what we call the alphabet soup, all of these different initiatives, which had done great work in setting sustainability standards, but in a very confusing environment. So we were delighted to announce that as part of the establishment of the board, we would consolidate with the Climate Disclosure Standards Board, who Tim formerly worked with, and the Value Reporting Foundation that houses the Integrated Reporting Framework and the SASB standards, so that we could benefit from their work. We could have the benefit of their very talented and experienced staff joining the organisation, and we could reduce the complexity of the environment by consolidating our work. The other thing we were very happy to announce at COP26 was the publication of the draft documents, which gave an idea of what we thought the ISSB's standards should look like, and which were the precursor to the exposure drafts, which Tim is going to talk about later today. So moving to the next slide. So what's the ISSB all about? And it's really important to set the scene here. And why it's really important to set the scene is because there's lots of different people interested in sustainability information, and they all have valid perspectives. And so one question we wanted to be very clear on is, what perspective is the ISSB interested in? And our perspective is to be laser focused on the needs of the investor community. We want to build a comprehensive global baseline which enables investors around the world to have high quality information that's globally comparable to understand the effect, meeting the needs of investors and understanding the effects of sustainability risks and sustainability opportunities on the enterprise value of a company. Now, we know that investors are interested in this, but they still care a lot about financial statements. So it's really wonderful that the IFRS Foundation has the benefit of the IASB and the ISSB working together so that we can make sure that the package of information provided meets investors' information needs. But we also want to be global. So we're drafting our standards so that they work well with the IASB's requirements, but they're also what we call GAAP agnostic. For example, a company using US GAAP could apply the ISSB's exposure drafts. But now moving to this building blocks approach. It's a big grey rectangle on this slide. As I said, sustainability information is important to many different people for many different reasons. Investors are interested in sustainability information, but it's also needed for other purposes, for public policy purposes. And we also know that jurisdictions, even when they're focused on investor needs, may have particular jurisdictional information requirements. So if you think about the SEC at the moment, they've got proposals out that are designed to meet investor needs, and they have some specific disclosures that they're interested in. In Europe, we have, for public policy reasons, a broader multi-stakeholder focus with the information that they're focused on. Those are also important information needs. What we want to do is build the global baseline that provides a common basis to meet investors' information needs around the world, which would then enable jurisdictions to add on additional disclosure requirements to meet a particular jurisdictional need or a broader stakeholder need beyond investors, but by building on top of our baseline, again, because that's a more efficient way for preparers to prepare to meet multiple information needs. So moving on to the next slide. One part of this building block approach, which is really important, is the MOU, the Memorandum of Understanding that we've signed with the Global Reporting Initiative. We're really delighted to work in partnership with this other really important global sustainability standard setter. And for me, there's two primary benefits of this partnership. The first is that we can make it clear that our focus is on investor needs. We're really interested in focusing in on what investors need for decision making. But we're acknowledging that other information needs are also important, and that's the role of GRI. But by working in partnership, using this building block approach, we hope to identify a set of disclosures which meets the investor needs, and then an incremental set of disclosures that GRI would be interested in to meet, in addition, the needs of others. So working in partnership, this is a variation of this building block approach. Moving to the next slide. As I said, we were really delighted that we have the benefit of working alongside the International Accounting Standards Board. And one of the big benefits of that is that we can make sure that our requirements are compatible. They work well together so that when preparers use the IFRS Accounting Standards and the Sustainability Disclosure Standards together, the package makes sense and we meet investor needs. It also means that we're able to benefit from the fact that with the integration and consolidation with the Value Reporting Foundation, we are able to work on the IR framework, which we have inherited from the Value Reporting Foundation. A few weeks ago, we said publicly that we intend to build on the IR framework and that ultimately the objective of the boards would be to develop a corporate reporting framework that brings together a reporting package that combines the financial statements required by the IASB with the sustainability information required by the International Sustainability Standards Board. Moving to the next slide. So we're very much driving the integration in reporting. We are interested in connecting information. So we are already starting to do that actually in the general requirements document. So not to steal a little bit of Tim's thunder later on, but in the general requirements document, we're already pointing out that it's really important for investors to understand how what a company says about sustainability risks in its sustainability reporting, how that relates to what they say in the financial statements. We say that a company should make sure that linkages in the information are clear. And we go so far to say that when it's relevant, consistent assumptions must be used in the sustainability reporting and in the financial statements. There should be a cohesive story that a company is telling. Moving to the next slide. So since COP26, as Emmanuel was just mentioning, we've made significant progress. We're delighted that yesterday we were able to announce the next 4 of our board members. I'm enjoying working with Emmanuel, but it will be nice to have more of us as well. By the end of June, we should have completed our consolidation with the Reporting Foundation. We completed the consolidation with the Climate Disclosure Standards Board in January. And as you know, we have moved from our prototypes to our exposure drafts. Moving to the next slide. I'll just talk quickly about the standards architecture before I hand over to Tim. What's really, I think, interesting with being able to publish 2 exposure drafts is you can already see the foundation for what the suite of standards that the new board will develop looks like. And you can see that in 2 ways with the exposure drafts. So just touching on that quickly. On the left-hand side, we have this sort of onion-looking diagram. And this is the way that we intend to approach the disclosure of sustainability information across topics, always using this foundation, the 4 core elements that we've taken from the Task Force for Climate-Related Financial Disclosures, asking for information on governance, strategy, risk management, and metrics and targets. That will be a common thread right through our literature, and you can see it in both of our exposure drafts. On the right-hand side is starting to set out what the suite of requirements will look like. So we have an overarching general requirements document, which Tim will talk about, which will be accompanied by a series of specific disclosure requirements that set out the specific disclosures required in relation to particular sustainability risks and opportunities. We've started with a specific set of climate disclosures because our stakeholders said that was the most important priority for the world. We're going to move in to fill out our volume of requirements when we consult with you and you tell us what our next priorities should be, which will happen later this year. Moving to the next slide. And handing over to Tim.
Thank you, Sue, for that. And I'm really delighted to be here. Before I start, just like to thank you again to the organizer, distinguished speakers, for inviting us here. It's really nice to hear some strong support from Asia, Oceania, which is really important to us, and equally, it's really important to get your feedback, and this kind of forum is really great to get that views. Equally important that you submit a comment letter so that your feedback and your views could be feed into our formal due process. So what I'm going to do next is just to give you an overview of the exposure drafts, starting from the general requirements. I'm going to spend about 10 minutes. We do a bit of poll questions, and then 10 minutes on climate, and I'll hand it over after that to Oki for a more extended Q&A session. Starting with the general requirements. So it sets out, as Sue mentioned earlier, it sets out that overarching requirement which allows the connections to be made. It sets out this overarching requirement for a company to provide material information on all significant sustainability related risks and opportunities which are necessary to assess enterprise value. And what we really mean by that is that we require a company to provide material information on their significant sustainability related risks and opportunities, and not necessarily only those which are covered in a specific IFRS sustainability disclosure standards. So at the moment, we have along the general requirements a proposed climate standard. So a company would apply that climate standard in order to fulfill that requirement with regards to climate related risks and opportunities. And there will be more in the future, and a company would apply those standards to fulfill the general requirements. In the absence of specific IFRS sustainability disclosure standards, then the general requirements also points to other established standards and frameworks which would help preparers to fulfill that requirement. Fellow accountants will notice that this is fairly similar to IS1, which also points to other authoritative sources in absence of specific IFRS standards. So this is really designed to mirror that requirement in IS1, which essentially is to require a company to provide all that necessary information and not just that's covered in the specific standard. In terms of the structure of the general requirements, it's very much structured around the 4 TCFD content areas. So governance, we require information on the governance process, controls and procedures that the company use to monitor their sustainability related risks and opportunities. Strategy, how an entity strategy addresses those risks and opportunities. Risk management, how do they identify those risks and opportunities, and metrics and targets, so the information that they use to manage and monitor an entity's performance. So it is designed very much with the IFRS accounting standards in mind, as Sue has alluded to earlier. So you'll notice that the exposure drafts includes definitions and requirements which are consistent with the ISSB's conceptual framework, with some aspects of IS1 and aspects from IS8. The key features of the general requirements includes this emphasis on consistency and connections. So if you think about the sustainability reporting landscape today, you might be able to find sustainability information in the annual report, some elsewhere, and they might be prepared on a different basis. So it's really difficult for users to make sense of those different types of information. So what this will provide is a more consistent and basis for preparing sustainability disclosures and financial statements. And as a result, users will have a better understanding of the connections between sustainability disclosures and the related financial statements. So it requires a company to explain linkages in those information and use consistent assumptions when relevant. And as part of that, timing is an important factor here. It's really important that financial statements and sustainability disclosures are prepared for the same reporting period and they're published at the same time, because otherwise it would be difficult for users to understand that connections. It is designed with global application in mind. The general requirement is intentionally neutral with regards to location of information. So sustainability-related financial information could be provided in management commentary, for instance, if a particular jurisdiction requires a company to do so. It could be presented as part of MD&A, for instance, if the jurisdiction requires them to do so. And it also allows additional jurisdictional specific information to be provided as part of that as well. So the key objective of the general requirements is the provision of information for the capital market, information that enable an assessment of the effects of sustainability-related risks and opportunities on a company's enterprise value. So we focus on the significant sustainability-related risks and opportunities. And what we were trying to say by that is that we try to signal that we essentially only want those significant ones, which would affect assessment of enterprise value. We're not asking for minute details of all sustainability-related risks and opportunities. And equally, that might mean that information, including the impacts of a company on people, the environment, and planet, might be required when they affect assessment of enterprise value. And ultimately, I think materiality is really important there. So the general requirements, as mentioned, it sets out that overarching requirement, and a company would fulfill that by applying specific IFRS sustainability disclosure standard, for instance, the climate standard. And there will be more that in the future. In absence of that, in the meanwhile, the general requirements point to establish standards and frameworks, such as the ISSB standards or the CDSB framework and the associated application guidance. So in order to identify what are the significant sustainability-related risks and opportunities, a company could go to ISSB standards, look at the disclosure topics, and that would help them to identify those significant ones. Equally, a company could, for instance, look at the CDSB application guidance on social to see whether social presents a significant sustainability risk and opportunities to the business. We also provide illustrative guidance for doing that. Just to reiterate, connected information is really important. So the general requirements would require a company to provide information that allows users to assess that connections between sustainability-related risks and opportunities, and importantly, as well with the information provided in the financial statements. So as a result, users would have a more holistic view of a company's performance. As mentioned, timing is a key feature there. So we require the sustainability disclosures to be published at the same time and for the same reporting period to allow that connections to be drawn out clearly. Value chain information could also be would also be required if it is material, if it presents material information to the users. So, for instance, in the climate, the proposed climate standard, Scope 3 emissions would be required if it is deemed to be material. Again, we're not asking a company to provide all of their value chain information. That materiality judgment is really important in identifying what are the information that investors are likely to find useful, and that would affect their assessment of enterprise value. So that's a brief recap of the general requirements. So I'm really keen to hear your feedback, your thoughts on the general requirements. So I've prepared this. We've prepared this polling questions. We've got 2 polling questions for the general requirements. The first one relates to the requirement to disclose all significant sustainability-related risks and opportunities. First question here: do you agree with the proposed requirements for an entity to identify and disclose all significant sustainability-related risks and opportunities, even if they are not addressed by a specific IFRS sustainability disclosure standard? Okay, I assume that the polling. Okay, thanks.
Okay, so far we have 124 responses, Fatim. Maybe wait for a couple more seconds before we close the first poll. Yeah, the number is still going up. Okay, let us stop there. I think we can stop there now. Let's share the result.
You know, that's really encouraging. 19% strongly agree with the requirement, and 70% agreeing with the requirement. The next one is around that connections that Sue has alluded to earlier as well. So do you think the proposal to require companies to provide information on connections between various sustainability related and opportunities and the connections to the financial statements, do you think that requirement would result in the provision of useful information?
Okay, 120 responses and counting. Let's give it another couple of seconds. Okay, let us stop there.
Again, really strong support there. Really pleased to see that 21% of participants being strongly in agreement with that requirement, and 70% agreeing with the requirement. So we'll get into more the specific questions, and there will be chance to talk and discuss on the requirements later. But before that, let me turn into the climate exposure draft. So the climate exposure draft is another proposed standard that we've come along with the general requirements, and they are meant to use in tandem. The climate exposure draft sets out specific requirements for disclosing material information about significant climate-related risks and opportunities. It incorporates elements from TCFD. It also builds on ISSB standards. If you're familiar with TCFD, then you should be familiar with the following requirement: disclosure of information about the physical risks of climate change, for instance, those relating to flood risk, transition risk, for instance, regulatory change, and climate-related opportunities, which is equally important aspect of that risk and opportunities. The objective of the climate proposal is to enable investors to assess the effects of climate-related risks and opportunities on the company's enterprise value. So that's consistent with the general requirements. And as part of that, the climate exposure draft also requires a company to provide information that would enable investors to understand a company's response to and strategy for managing those climate-related risks and opportunities, and to evaluate the ability of a company to adapt its planning, business model, and operations in response to those risks and opportunities. So it builds on the TCFD. The TCFD has been adopted by many companies on a voluntary basis, but we have to bear in mind that it's not designed for not necessarily designed for enforcement. So what we've done here is that we've taken the TCFD and we've built on that into requirements that would be capable of enforcement, because that's really important in facilitating the provision of high quality information. It also builds on SASB standards, so the industry-based requirements included in Appendix B, with some proposed changes, essentially to make it more globally applicable, with internationalization of some of the metrics, and with addition to the financial sectors to update recent thinking on the exposure to climate-related risks and opportunities. And I would just like to say on the industry-based requirements, I think some people find it a bit daunting, but actually as a preparer, you're only required to apply a subset of that industry-based requirements depending on the industry that you're in. So it's not necessarily onerous. It's designed to help preparers to identify what are their significant climate-related risks and opportunities, and I'm going to touch on it a little bit more shortly. The key features of the climate exposure draft includes transition planning. So if we look at the state of sustainability reporting today, we see companies being more sophisticated in their carbon emission measurement, and some have even started to set out a net zero target. But it's really difficult at the moment for investors to monitor that progress and to some extent to assess the credibility of such targets. So what it will provide is a more clear information on the nature of the emissions targets, and the including how would a company use what are the plan to meet those targets. Are they going to adapt the business model, or are they going to use carbon offsets, or a bit of both? Resilience as well. It requires a company to provide information on the resilience of their business model when they are stress tested against multiple scenarios. And scope 1, 2, and 3 emissions are really key there in order to monitor progress. Governance. So the structure of the climate proposal is structured around that 4 TCFD pillars, content areas as well. So governance, the governance process, controls and procedures used to monitor and manage climate-related risks and opportunities. On strategy, so what is the kind of entity's strategy for addressing those climate-related risks and opportunities? And they are broken into a few aspects there, which I will touch on shortly. So we require a company to describe what are the nature of those climate-related risks and opportunities, the physical risks, transition risks, and what are the climate-related opportunities that they are going to take. Business model and value chain, current and anticipated effects on of those climate-related risks and opportunities on an entity's value chain, and where in its value chain are those risks and opportunities concentrated. Transition plan, as mentioned. So as a result of the climate proposal, users would be able to better understand how would a company achieve their climate-related targets? Is there any current and anticipated changes to the entity's business model? How will this plan be resourced? So users will be able to make a more informed assessment of a company's progress, and also how are they adapting to a low carbon future. It also requires, as part of that, detailed information on the nature of the target itself, which is really important. A critical aspect of that is the use of carbon offset, which we pay a particular attention to. So it will allow users to better understand the role of carbon offsets and to assess the credibility of the carbon offsets used by a company. And that connection with the financial statements is a really important part of the climate ED as well. So it requires a company to provide information on the effects of those risks and opportunities on the company's financial position, financial performance, and cash flows. And we require a company to provide quantitative information for the above. It could be provided as single amounts or a range, taking into account of those uncertainty. If an entity is unable to disclose quantitative information, then they could provide qualitative information and explain why that's the case. Climate resilience. So as part of the climate proposal, it also requires a company to provide information on the climate resilience of its strategy, its business model. We require a company to use climate-related scenario analysis and to describe the outcome of those analyses. What are the implications? And what does that mean in terms of their adaptability, capacity to adjust and adapt to different scenarios? There's also a relief here. So if a company is unable to use climate-related scenario analysis, then they may use alternative method, provided that sufficient information is given there. And we detail that kind of information that is required when a company use alternative method. Risk management. So we've been talking about the risks and opportunities, but equally important, what are the processes which are in place in order to identify those risks and opportunities, how to assess them, and how to manage them. And last but not least, metrics and targets. So the climate ED proposed the following 7 cross-industry metric categories, which is taken from the latest update to the TCFD, namely greenhouse gas emissions, including scope 1, scope 2, and scope 3. Transition risk, so the amount of assets or business activities which are vulnerable to transition risk. Physical risk, the amount of assets and or percentage that are vulnerable to physical risk. So these are metrics information. Climate-related opportunities, those which are aligned to climate-related opportunities. Capital deployment, so around capital expenditure and financing, which are deployed in order to respond to those risks and opportunities. Internal carbon prices and the percentage of remuneration which are linked to climate-related considerations. Supplemented by industry-based requirements. So as mentioned earlier, so a company would take the industry-based requirements and then look up which applies to them, depending on the industry. And we talk about significance. So how do a company comply with this requirement? So with regard to this specific example, what they need to do is to disclose those 7 cross-industry metric categories, and then look at the associated industry-based requirements, which would help them to identify what are the other significant sustainability-related risks and opportunities which apply within the certain industry. So it's really designed to help to identify what are their significant risks and opportunities. And a bit further detail here. just to give a flavor, and just running out of time, so I'm just rushing here, just to give you a flavor of what's happening with the industry-based requirements there. So we've updated the ISSB standards in order to facilitate their global application, as well as adding some metrics update on the financial sectors to reflect recent thinking on those areas. So that's a really quick summary of the climate ED. Before we close and open up the standard Q&A, I still have 2 more polling questions. So the first one here for climate: do you agree with the 7 proposed cross-industry metric categories, including their applicability across industries and business models?
Okay, 90 responses and counting. 130. Okay, I think we can stop there.
That's an interesting result. 17% strongly agree, 65% agree, and 12% no opinions. I take it that some people want to talk about each metric categories in detail, which we're going to do shortly. The last polling question here relates to the climate, the industry-based requirement. The proposed industry-based approach acknowledge that climate-related risk opportunities manifest differently. And as mentioned, because the requirements are industry-based, only a subset will apply to a particular entity. Do you agree with the proposed industry-based requirements?
Okay, 100 responses and counting. 120. Okay, I think we can stop now.
Again, really interesting. 17% strongly agree, 69% agree with the industry-based requirements. So that's really encouraging. And before I pass on to you, Pak Oki, sorry for the timing here. Just a quick note to say that it's really important that we hear your feedback. So please do send your comment letter. You can also do that via a survey. And there are other jurisdictions as well, which are doing their public consultations. So it's really helpful if you could also respond to that, noting that the importance of global baseline on your views on that. So with that, I'm not going to take any further time and pass it back to you, Oki.
No problem, Fatim. And thank you, Sue and Tim, for that presentation and for setting up the context for our discussion today. And ladies and gentlemen, I'm sure you will have plenty of time. Perhaps if you have a follow-up questions you want to ask, please kindly submit your question through our Q&A function. I can see that some of you already submit your questions, so hopefully we will have time to address those questions during the panel discussion and Q&A. So on that note, ladies and gentlemen, one of our objectives for today's webinar is, of course, to give you, our stakeholders, the opportunity to engage with the ISSB, to ask questions, and perhaps also share your thoughts, comments, inputs, feedbacks on the exposure draft. And we will try our best to facilitate that in the next 50 minutes, I think. So for our discussion, we have with us a panel of guests representing some of the professional accountancy organizations, national standard setters and practices in the region. So welcome, panelists. And again, to our audience, please use the Zoom Q&A function if you want to submit your questions. And to moderate this very important discussion, we are privileged to welcome our moderator, Mr. Eugene Wong. Eugene is the CEO of Sustainable Finance Institute Asia, SFIA, an independent institute established to catalyze ideas on sustainable finance at the policy level in Asia, particularly in ASEAN, as well as propel actions in support of those policy ideas. Eugene also represents SFIA as an observer in various discussions and groups on sustainability. Eugene was previously the Managing Director of Corporate Finance and Investments of the Securities Commissions Malaysia, Chair of the Deputies of the ASEAN Capital Markets Forum and co-chair of its Sustainable Finance Working Group, and also a co-chair of the ASEAN Working Committee on Capital Market Development. So such an impressive roles and achievements. Welcome, Eugene. Great to have you on board. I will pass the control of this session over to you.
Thank you very much, Oki, for that very kind introduction. And thank you very much, Sue and Tim, for the very succinct presentation on the exposure drafts. Well, these days, everyone's talking about the need to address sustainability, and it's very clear that in order to do this, we need to allocate resources, including capital, as Chair Nishan correctly pointed out just now, in the right way. For this to happen, we need a very powerful ecosystem, and in ASEAN, the capital market regulators are working to enhance the 3 pillars of a sustainable finance ecosystem. That's taxonomy, transition, and no surprises, disclosures. Without effective disclosures, we really can't optimize the taxonomy and the transition pillars. So the 2 primary blueprints guiding capital market efforts in sustainable finance for ASEAN, being the ASEAN Capital Market Forum's roadmap and the Working Committee on Capital Market Development's report, point to the importance of having a common disclosure framework for ASEAN. And these reports were released in 2020 when there are quite a few standards and frameworks operating concurrently. We had GRI, we had IRC, SASB, CDSB, CDP, and we had TCFD. And we also had national efforts such as the stock exchange requirements. This led to concerns about fragmentation, confusion, and importantly, fatigue when people are trying to comply with different sorts of requirements. And the regulators took the view that they would encourage adoption of the main international frameworks while observing international developments to see if any one particular framework could be used for ASEAN and how that framework could be used. The different goals and audiences of the various frameworks meant that any rollout would require substantial official sector backing, and it would have to be done through a highly credible party. In June last year, IOSCO, of which all the ASEAN capital market regulators are members of, released a report on sustainability related disclosures, which reflected a vision of ISSB under the IFRS Foundation, with the aim of improving the completeness, consistency, comparability, reliability, and auditability of financial information. So the recent flurry of events, the merger of SASB and IRC into the VRF, the establishment of the ISSB, and the consolidation of VRF and CDSB into ISSB, which is using TCFD as a base, has really quantum leaped us into this vision. And indeed, the ISSB has worked incredibly fast to give us 2 fundamental EDs. Well done to the ISSB team on that. So now, of course, for us in ASEAN, the question is, how do we leverage on this effort to help us with our sustainability journey? How can the ISSB standards be fit for purpose internationally and for ASEAN? It's worthwhile to note at this very moment, the ASEAN Sustainable Finance Taxonomy, which is overseen by the ASEAN Finance Ministers and Central Bank Governors, is also undergoing a consultation to ensure that it's fit for purpose for ASEAN while being internationally credible. And in this respect, I'm really encouraged by Chairman Emmanuel's comment about the ISSB's desire to have a truly global baseline, which is really what we need right now. So with this in mind, I would like to invite colleagues from our ASEAN Professional Accountancy Organisations and the National Standard-Setters to share their perspectives and also ask those burning questions that many of us have and are wanting to ask. What I will ask panelists to do is to turn on their camera when they speak and to kindly turn it off after they've spoken. As a start, can I invite Ms. Tomoko Tsuruno from the Japanese Institute of Certified Public Accountants to kick us off. Over to you, Tsuruno-san.
Hi. Hi, my name is Tomoko Tsuruno. Can you hear me?
Yes, we hear you perfectly.
Okay. Hi, my name is Tomoko. I'm a technical director at JICPA. I mainly research on the topic of sustainability disclosure. So thank you very much for this opportunity to talk in this session. In general, JICPA welcomes and supports the 2 proposal S1 and S2, but we have internally discussed some of the topics in the proposals. So I would like to share one of them, which is ensuring credibility. We believe that credibility of sustainability-related financial information is a highly important issue, and the third-party assurance is an effective means to ensure credibility. So when developing the disclosure standards, it should be designed in a manner that feasibility of assurance is ensured. Sustainability information includes some different characteristics, which are quantitative and qualitative information, and historical and forward-looking information. And depending on these characteristics, the approach to ensure the assurance feasibility is different. So it is important to categorize information according to such characteristics and set the requirement with considering the assurance feasibility. In our view, performance indicators have the highest assurance feasibility because they are quantitative information. Also, governance and risk management information may have the higher assurance feasibility because they are just process or governance structure, which are based on the fact. On the other hand, some qualitative information, such as identification of risks and opportunities or outlook on financial impact, we are in the process of considering how we can provide assurance against it, which aspects we can assure, what kind of process is useful and practical. From this perspective, we would like the ISSB to add some more concrete requirements, for example, regarding materiality, more detailed disclosure about policies and processes should be required, because it may be difficult to assure the entity's judgment to identify material information itself. So one of the possible approaches is to provide assurance against the consistency of the process, judgment, and the disclosure. In order to provide such assurance, we are considering more detailed disclosure is need to be required. That's all for now. Thank you for your attention.
Thank you very much. Can I turn it over to Sue and Tim?
I'll just take a quick to give a bit of context on that. So with regard to assurance, we're been speaking to the IAASB, and then they've got their established assurance standards on this for sustainable reporting, and we believe that they're gonna they've included further projects to build on that. So hopefully that will help.
Thank you very much.
Yes, that's right. Exactly what Tim said. And just to add something else, Tomoko, thank you for being very specific with your suggestion, because I think you're right that some of the information we are proposing to ask for is different in nature to what you might see in financial statements, so different to what we see usually from an assurance perspective, not totally different. So for example, expected credit losses, IFRS 9, as you know I love, is forward-looking, and so we've had assurance of that. So there's some similarities, but there's certainly differences. And I liked your comments on qualitative, because it's really, I think you had some practical suggestions there around materiality, in terms of, if we made it explicit that you needed to explain the processes and the procedures, etc., as a basis for assurance, that's a good idea. So it's building on the sort of judgments we expect, but making it clear you need this information to be provided to support the assurance process. So thank you. That's a good practical suggestion.
Thank you very much.
Thank you very much for that. If we can move on to Dr. Noor Mazila from the Malaysian Institute of Accountants.
Right. Thank you. I hope you can see me. I hope my voice is loud and clear. And thank you very much to the presentation, and to AFA and AOSSG for for coordinating this session. So I would like to make this quick, short and sweet. I'm from the Malaysia Institute of Accountants, part of the member of Integrated Reporting Steering Committee. But really, MIA actually circulated the EDs to all members, and they collated feedback from members of various committees as well in MIA, including those from Public Practice Committee, Public Accountant and Business Committee, and the Integrated Reporting Steering Committee, so that MIA would be able to gather, overall view from various aspects. And actually, MIA has been following the development of the corporate reporting dialogue, and we are very pleased with the formation of ISSB. And congratulations to Sue and the team, and also on the issuance of the 2 exposure drafts, which are very much awaited. Actually, generally, we receive favorable feedback from MIA members on the issuance of these 2 EDs, I think, because everyone, especially many practitioners, are grappling with the alphabet soup of standards and framework. And there's so much hope on the issuance of the exposure drafts. And it finally came out. And I think that's where everyone is very excited. So we received general favorable feedback, but I think there are a few points that we would like to highlight today. First is actually, we really applaud the embedding of principles from integrated reporting, such as the notion of value and connectivity, because I think bringing a few frameworks on board, we really need to ensure the connections, connecting the dots is actually very important. And also based on the scenario in Malaysia, whereby the integrated reporting has been included in the Malaysian Code of Corporate Governance, where large companies are very much encouraged to embrace IR. And to date, I think more than 90% of the large public listed entities have actually adopted IR in the issuance of the annual report. Therefore, I think the practitioners, the companies would like to see how do they connect on the notion of enterprise value. That enterprise value actually was adopted in the exposure draft, and how does that interoperate with the notion of value creation within the integrated reporting framework. And perhaps that can be demonstrated with more examples. Also, if there would probably be a plan to also include the IR framework as part of the appendix. I think the announcement last week on the Value Reporting Foundation being embedded into IFRS Foundation also mentioned about taking over the IR framework as part of our IFRS Foundation materials. And the other thing is about, we also receive comments from companies that have adopted GRI, and they wish to see that GRI to be more streamlined and harmonized within the exposure draft and within the future ISSB standards. And as far as the exposure draft on climate change, I think it will require steep learning curve within the jurisdiction in Malaysia, because I think many companies have yet to adopt TCFD, and especially the requirement or the plan from the central bank and the Bursa Malaysia, our stock exchange, is still actually a bit fluid and still ongoing, where the consultation paper on adoption of TCFDs have just ended. And we've yet to see TCFDs being incorporated in the requirement of the stock exchange as well as the central bank. So the other thing is also the commentators within MIA also wish to see more illustrative examples, like in the ISSB standards, like the IFRS 15, for example, there are about 60 pages of illustrative examples. So I think they're quite used to that, and they wish to see such examples being given. So those are my comments as said now. Thank you.
Thank you very much, Sue. Tim?
Yeah. So I'll defer to you on that.
Or you're going to let me go first this time? Okay, so thank you very much. Really interesting comments, and pleased that the announcement on the IR framework was well received, because I was very closely involved with it, so that's good news. And you touched on a couple of things that I'll just pick on there, some useful information, but just a couple of things. I think you touched on capacity building there, the fact that, there's many, we know that it's complicated because there's so many different starting points for companies. Some have already done a lot, some are just starting to think about this. And something we're really thinking hard about as preparing for the redeliberations is, how do we help guide companies through this journey that they need to go on? What materials might the board be able to do directly, or working in partnership with others to really explain to a company how to get going and the steps to go to adopt? And also thinking about whether we need to identify particular requirements where companies, maybe smaller companies or companies in emerging markets, might need a longer time frame to apply those things than other companies or countries might need, and trying to be proportionate in our response to that. So we're thinking hard about that. So when you guys are responding, if you have any practical suggestions for what you think might be helpful, we'd really appreciate that, because that's something we really, I think, are going to spend quite a bit of time on. It's coming up very frequently in the conversations we're having with people. And your idea on illustrative examples, I think, is a good one as well. I know Tim comes from the CDSB, and they were very good with the sort of practical materials to really assist people make things real. And I think that's something we would really be interested in working on when we have a bit more time. Clearly, we were very, focused on getting the exposure draft out. We could only do so much, but I think it is a good idea. And maybe one where we can work in partnership with others, you guys and the national standard setters, where you have real world cases of things people are grappling with, to make it really realistic and useful for people, would be a good way of us working together, actually.
Yep, thank you very much. I'm looking forward to to what's coming in the future.
Yeah. Thanks, Sue. I think that was a really encouraging response. It's something certainly, all the preparers and standard setters are also going to be very keen to participate in. Can I now invite Mr. Ram Subramaniam to share his perspectives? Mr. Ram Subramaniam is from CPA Australia. Right. Okay, he's doesn't seem to be here. How about Mr. Manil Jayasinghe from he's the chairman of the Accounting Standards Committee of the South Asian Federation of Accountants.
Hi, Eugene, and thank you for SAFA, for AFA and AOSSG for giving this opportunity. I think I must sort of first of all congratulate the ISSB for coming up with this document pretty fast. It was something of a need in the world. I think Sue mentioned about the alphabet soup, which was a real concern from a market point of view, because different people started using different frameworks, some of them probably cherry picking some of the frameworks, so there was no consistency in the market, no comparability. So hopefully this will bring some degree of consistency and comparability in sustainable reporting. One of the things I think, so we basically support the initiative, and we will definitely support in giving outreach and comments based on the 2 exposure drafts, which is due in July. Few things that I just want to mention is that just the preliminary analysis is that you mentioned about sustainability reporting and related financial information. One of the issues that I feel that is going to have a problem is if we don't have some form of a measurement criteria. People are definitely going to put numbers around these quantitative or qualitative disclosures. So then the question arises, if there isn't some framework or some guidance on what kinds of non-financial information that can come into this, there can be some confusion and then different levels that could happen. So that is one area that I feel there could be some issues. Also some degree of clarity probably on when you say sustainable and sustainable related financial information, what exactly this means, and maybe through examples or some additional implementation material or whatever the way you want to go forward might be also helpful in applying the standard. And I think, as many others mentioned, capacity building will be a key issue. So from a SAFA region point of view, we ourselves have started the sustainability reporting, like sort of a standard setting body, where we are looking into this to issue probably consistent standards. So for application, so ISSB coming up with this will definitely help us that. Well, that's about all I need to sort of mention.
Thank you very much. So Tim, this capacity theme is a very recurring one, and it's going to be very useful if all of us can come together to really enhance the capacity of preparers, practitioners, the people who are providing assurance services, and even the policymakers and regulators. And certainly it was also a question that's been raised through the Q&A box. There's also a question about quite similar to what Manuel has raised about interpretations for specific industries, because every industry is going to have a slightly different nuance and slightly different drivers. So there was a question as to how the ISSB might be addressing this at a later stage. So perhaps I can turn it over to you now.
Sure. I think with the I'll have a first go, and I'm sure that Sue will add a bit more to that. I think with the related to what Manuel's earlier comment as well, I think with the quantitative and information, it is set out more clearly in the specific IFRS sustainability disclosure standards. For instance, if you look at the climate, then you have GHG emissions, and then you have transition risk, physical risk, and all the 7 cross-industry metric categories, which hopefully will provide a bit more comparability. And that sort of like ties into the industry-based requirements as well, which I think is not perhaps not understood very well at the moment, but it's really designed to allow a company to identify what are those significant sustainability-related risks and opportunities that apply to their specific industry. Right, so in identifying those significant ones, they could take the industry-based requirements, look at the disclosure topics which are applicable to them, and then and identify whether those are relevant. So it's really I think set out with that mindset. Sue,
yeah, that was perfect, Tim. I'll just add another couple of complementary perspectives to your very good answer. So the first is, I think sometimes when people ask me about industry-based, or industry-specific, I feel like they're asking me if I'm really sure that I'm comfortable that the information could look quite different because of different industries in which companies operate. And my answer to that is, I would hope it looks different, because I wouldn't expect the effect on climate to be the same for, I don't know, an airline or a mining company relative to a retail enterprise. So, I hope that the disclosures would be different in the first instance, and the consequences of particular risks like climate change will manifest in very different ways for different industries. And so, that's a sort of an expected and a good thing in my sense in the first instance. So that would be my first observation. My second one, building on what Tim said, which is exactly right, is that what really drives, enterprise value, like the value of a company's shares and the value of a company's net debt, coming from a particular sustainability risk, is going to manifest very differently depending on what activities a company is engaged in, which is exactly why our proposals include industry-based requirements. So they're designed to really pick up on this fact. And the SASB have been through a process that we've borrowed, where they've identified the key pieces of information which they've identified really matter when you're trying to assess an enterprise value. And so they're there really, as Tim said earlier in his presentation, to help companies. And if you look at the general requirements document, I think it's particularly helpful there, because I can only imagine that if I'm a preparer, and if I haven't really thought much about sustainability in the past, and you pick up S1 and it tells you Sue Lloyd is going to require you to report on all of your significant sustainability risks and opportunities, that sounds like quite a hard thing to think about. But then if you're able to flick to the industry chapter of the SASB requirements for your industry, actually they've identified the things you probably should start thinking about. So it's really designed to help with that process. So as Tim was saying before, in the first instance, you might think, oh my gosh, 71 industries, that looks dreadful. But actually it's helpful if you can identify which industry you're in, and then it gives you a clue of where to start your thinking.
Thanks, Sue. That's really useful. I'd like to invite Ms. Minzi Zhang and Ms. Xiaoyi Lei from the China Accounting Standards Committee now to share their views. Welcome.
Okay, can you hear?
Yes, perfectly.
Okay, so good afternoon, everyone. I'm Minzi Zhang from China Accounting Standards Committee. Well, I'm very glad to be invited to this panel today. Well, recently China has the sub-working group of IS2 ED in the AOSSG. According to the working group's plan, the members will send comments to us in early July. So currently we haven't collected the AOSSG members' views so far. So today I will just share some preliminary views from stakeholders in China. First of all, we would like to express that we support the ISSB's goal on building comprehensive global baseline of sustainability-related disclosure standards. Right after the 2 exposure draft has been published, we have translated all the material into Chinese and seek comments from our stakeholders. Also, we have conducted 7 outreaches so far, which covered all the 11 industries listed in Appendix B, with 59 Chinese leading companies in each industry. So according to the outreach, Chinese stakeholders have 4 general comments in relation to S2 exposure draft. The first comment is our stakeholders think that the requirements in the ED are way too high, which seems difficult to be implemented. For example, investors thought that the disclosures of scope 1 and 2 emissions from associates and joint ventures are not that irrelevant to them because the base data is difficult to acquire, so the result might be inaccurate. Other examples including percentage of executive management remuneration, the scenario analysis, and the scope 3 emission. These are 3 extreme difficult areas for entities to identify. Our stakeholders suggest the board could consider allow entities to disclose such information voluntarily or by quantitative way. Well, secondly, the ED requires entities to disclose metrics and targets like GHG protocol, which is not a widely used metrics in China. Many stakeholders suggest that the board could do more research on whether these metrics and targets are globally accepted. Well, thirdly, even though attempts have been made to make Appendix B more international, there are still a large number of metrics from US industries and even individual US companies. The stakeholders think maybe more time is required to review the Appendix B and to identify areas that are not practically locally from the global perspective. Well, last but not least, according to the ISSB, current climate standard is the first one under the theme standard. Other thematic topics will cover water resource and etc. However, our stakeholders noticed that some of the topics in Appendix B exceed the scope of a climate standard. For example, the requirements on water management and ESG information are beyond the scope of climate. So stakeholders feel a bit confused on the relationship between Appendix B and other thematic standards. So due to the time limitation, there are some preliminary comments from Chinese stakeholders at the moment. So next, we will continue the outreach in China and also collect comments from AOSSG working group members as well. We hope that the board could have more emphasis on the Asian and Oceania region so as to set up a sustainability standard which will be applicable to every jurisdiction at different stage. Thank you.
Thank you, Minzi, for raising those very interesting perspectives. Sue, Tim, if I can just tag along to Minzi's question. In my discussions with people about the drafts, there have also been questions raised about what sort of scenario analysis should be conducted. I mean, how do you select those scenarios? Is it on a 2-degree or 1.5-degree scenario? And do you look at your industry peers to actually determine what's the most appropriate thing? Do you look at it from a geographical perspective where you look at your country's own net zero ambitions. So these are some really interesting questions, which I gather you are looking for feedback for as well, but we'd be really interested to hear your preliminary views.
I'll start with I'll respond to the easy questions and I'll leave the hard ones to Sue.
It's great strategy, Tim. I have to learn that.
I didn't hear any easy questions, but I'll be pleased to see which they are.
I think with the scenario analysis, it's probably the easier one, not necessarily the easiest, but I think the requirement is we don't really set out any particular scenario for a company to use. What we want is for a company to disclose whether which kind of scenarios that they've used in undertaking those scenario analysis, and whether they've used a scenario that is in line with the latest international agreement on climate change. So we don't really set out which kind of scenario to use. There are further guidance, however, that preparers could see from TCFD on climate scenario analysis, the kind of established scenario that people have been using out there. So it's not really starting from scratch. There's already plenty of guidance provided there on scenario analysis. And if I just may touch on that comment from Minzy about Scope 3 emissions and associates and joint ventures. So we do require Scope 1, Scope 2, and Scope 3. But again, I think materiality judgment is really key there. So if certain information is not deemed to be material, then a company, we're not asking a company to report on all of those 15 Scope 3 categories. However, if for instance, supply chain is an important element of value chain that is exposed to climate-related risks and opportunities, and that investors would expect to see that kind of information, and in that case, that would be useful actually for a company to provide such information. So I think that there is a bit of nuance there in terms of what is required, what is set out in the requirement, and the materiality judgment that is needed there.
If I can just extend that answer, because we also do have a question about how many levels that Scope 3 should be reported up and down. So you did talk about materiality just now. And does it go all the way through the value chain?
Yeah, so I believe there are 15 Scope 3 categories which are set out in GHG protocol, and there is further question about methodology, which I'll let to respond to. But again, Eugene, it's all down to materiality judgment. So it depends on what kind of information would affect investors' assessment of enterprise value. So we're not asking a company to kind of like report on everything just for the sake of it. Rather, it's identifying those information which would be useful to users.
So absolutely. So materiality is the prime guide then.
Yes, I would. Yeah.
Thank you.
Yeah, exactly right. So it wouldn't be appropriate for us to say, look out one step or two steps, because there might be something really important to an investor that is quite a long way down the track chain. I think that, if you ask me sort of for the guidelines for how you'd think about it, you'd probably think that, in the first instance, it's more likely that somebody closer to you in the supply chain would be have a material effect on your enterprise value, and less likely that somebody further out would. But you can't sort of ignore it as a process. But it's probably a reasonable assumption, in the same way that, when you're thinking about generally what information matters, you need to consider the long term. But things need to be a bigger deal in the long term to really be material to enterprise value today, as a general proposition. But there's no sort of, I can't say look out two steps or 3 steps or 1 step. It's not as black and white. But the great thing about the accounting profession, which we're members of, is we know how to apply judgment. So that's good. Can I come back and answer a couple of Mincy's other questions, because she raised some really important stuff. And Mincy, nobody else had raised that GHG protocol point before, with me at least. So that's really helpful to know. So that's good. We'll go and do some digging on its international applicability. Just another couple of questions. So, Mincy, you made a point that people are identifying metrics or information required in Appendix B to the climate document, which isn't international. if you could give us specific examples of that when you send us your comment letter, that would be really, really helpful so that we can look for that, because we're trying to make sure it is internationalized. And if we've missed stuff, that would be really important. And it's really important not just for this set of exposure drafts, but because we're planning to internationalize the rest of the ASB standards. So if we need to change our methodology, you know, that's really helpful, really powerful information for us. So thank you for taking the time to look at that. You mentioned that some people are looking at Appendix B and saying, why is this climate? You know, isn't this water? Isn't this, I don't know, human capital or whatever's in there? And it's a really, really good point, Mincy, and it's one of the challenges we had as the Technical Readiness Working Group. And we built on that work, obviously, when we did the exposure drafts. Sustainability risks are incredibly interlinked and interrelated. And so having a line and saying this is climate, this is water, this is human capital, this is biodiversity, it just doesn't work that way because there's so many connections. So we had to use judgments, and water is a good example. Many water issues arise because of rising temperatures, for example. So is it climate or is it water? And so we had to judge where to draw the line. And it's hard when you're just picking climate in isolation. But again, would be interested to hear if you think we've got the line in the right place. But just to give you a sense, you know, it was a judgment call for us when we were trying to work out what to include. And the last thing that you commented on, and I'll respond to it a little bit more generally, rather than specifically. So I think a little bit of what you're commenting on some of the proposals we've got on scenario analysis and other things is that it's hard for people to do. And I agree, it is hard for people to do. But it is information that investors really feel is important for them to understand the risks of their investments and to understand where to allocate their capital if they've got particular objectives from a sustainability perspective. They really want this information. And so we're trying to be aspirational, really, in terms of what we're asking for with the global baseline. And I think I'd really encourage us all to try and think about, okay, what's the, if we forgot about practicalities just for a second, what would be the really best set of information we think that investors would need to really understand sustainability risks and opportunities to make their investment decisions? So what's that population? And then, so that could be our aspiration. Then what can we do now? And I think it would be great if we could sort of think proactively about, okay, if the end goal is this, but we can only do this much today, is it best to have a path to get to the aspiration, allowing an appropriate amount of time, helping people with capacity building and understanding over the length of a longer journey, rather than saying, look, today it's really, really hard, so let's only aim low. Because I worry that if we set the baseline at too low a level, lacking a bit of aspiration, we miss the opportunity to really get that great set of information. And what we're really trying to do as well, sorry, I sound like I'm lecturing you and I don't mean to, but what we're really trying to do here as well is to make sure that we want companies to be thinking about this stuff when they manage their businesses. We want companies to be thinking about how they might need to manage their business because of different climate scenarios. And so part of the reason for why we ask for scenario analysis, just to pick on that for a moment, is because investors want some assurance and confidence that the board is thinking about that, because this is a really important thing for companies to navigate. And so even if a company just described in qualitative terms how the board is thinking about different scenarios and how they're thinking about how that would affect their business going forward, even if they can't do many numbers, that's still really important information. And we're almost trying to prompt companies to elevate those discussions to the board so that we've got better risk management and better robustness for these sustainability uncertainties going forward. And so we are trying to come up with a set of information that will be useful for management as well as investors as well.
Thanks, Sue. Minzy, the point you raised about the GHG protocols, I mean, it's an issue about metrics and whether universal metrics are going to be actually used nationally. And I guess with China, the issue is really that the NDRC requires a different metric. So it's really good you raised that, because I think that for other countries, we might have to consider what the national metrics being used are for national policy purposes.
And that would be really helpful information for us, because we don't want to make companies do something twice if we can avoid it. So that would be really helpful input for us.
Thank you, Sue and Tim, for your explanation and comments. And because according to our outreach, there are less than let's say 20% companies they are using GG protocol, and many companies they are also using the ISO 14064. Sorry. So this is our preliminary comments, but we will provide detailed comments in our comments later. Okay. Thank you.
Thank you very much, all. I'd like to invite Mr. Fu Yopin from the Malaysian Accounting Standards Board now to share his views.
Thanks, Eugene.
Thank you. Yes, we hear you, Yopin.
Yep. Maybe I would like to share some slides.
Yes, please go ahead.
I'm not sure whether can we see it. Can you actually view the slides?
We haven't seen it yet. No slides are up.
Oh, it's okay then. Maybe just perhaps I can just speak up. All right. Right. As you are aware, MASB is actually the national standard setter for the Malaysian financial reporting. All right. Under the financial report, under the purview of Financial Reporting Foundations, established under the Financial Reporting Act 1997. Right. All financial statements that are required to lodge with the Securities Commission of Malaysia, as well as Central Bank of Malaysia, as well as Register of Companies of Malaysia, are required to apply the MASB approved accounting standards. There are two sets of approved accounting standards in Malaysia. First, for PLCs, or inclusive of their subsidiaries, will be required to comply with the Malaysia Financial Reporting Standards, which is equivalent to IFRS Accounting Standards. And for non-listed or non-PLCs, they actually apply the Malaysian Private Entities Reporting Standards, which is equivalent to the LIFRS for SME Accounting Standards. And as far as Malaysia is concerned, in terms of the sustainability initiative that has been taken up to date, the Ministry of Environment and Water, or CASA in short, has been leading the effort towards Sustainable Malaysia 2030. And as far as sustainability reporting is concerned, under the Bursa listing requirements, listed companies are required to prepare or mandatory to report on the sustainability work that they have done, and to include the sustainability statements in their report, right? And there are a few working groups or working forces or platforms that has been taking care of working on the sustainability reporting, such as the Security Commissions. They have actually formed the Malaysian Green Financial Task Force in 2019 to look at green financial reporting, as well as the SC, Bank Negara Malaysia, has formed the Joint Committee on Climate Change, in short, JC3 in 2019, which talk about the CCFT in terms of application guide for the Malaysian financial institutions, which has become mandatory in 2024, right? As well as in MASB, we actually come out with our working group, which is called Working Group 71 in 2020, to actually look at the financial reporting, sustainability reporting in Malaysia. All right. As you are aware, MASB work actually mirror with that of the IFRS Foundation, and we actually provide a platform or provide a discussion platform for the Malaysian Constitution to actually provide their feedback through us to collect the information or the view of the Malaysian Constitution to the ISSB. All right. So far in MASB, we actually have conducted some outreach for the Malaysian Constitution by seeking feedback from them. The various engagement sessions that we have conducted will be like examples, invitation to public through MASB due process, conduct special discussion with specific stakeholders to obtain their view, and in particular in those Appendix B, where you look at the specific focus requirements under the sustainability standards, right? We also conduct public forum with the various stakeholders, and we also publish articles to support the disclosure, the reporting on sustainability. Okay, some of the preliminary views that we have heard from our constitution, which I think have been mentioned earlier by some of the participants as well, but I would like to add on to what they have said. First, we actually look at in terms of associate and joint venture, right? For a listed company, you are required to actually prepare your consolidated financial statements. Does that mean the holding company is also required? Of course, it's required to do to prepare their sustainability reporting, right? So we are actually looking at whether how are we going to obtain those information from our associate as well as our joint venture, right? In order to avoid having conflict of interest or getting information, private information from our associate and joint venture earlier, right? The other questions that we will look at is actually, that we heard from our constituents is actually in terms of, will there be a situation where they are required to provide commercial sensitive information when they are doing their disclosures in terms of sustainability disclosures, right? And as well as in terms of the uses of terms that's included under the Appendix B, right? Some of the terms might be applicable to certain country or certain jurisdictions, but it might not be applicable to Malaysia, to other jurisdictions as well. Then how do they going to do the reporting, right? And in terms of timeline, all right, in timing of the sustainability report, would that be equivalent to the timing of financial statements, right? If both statements have to come up concurrently, will there be a strain on the currently limited resources that's available, right? Or the constraint that we are facing in the country, especially in Malaysia, for example, right? And will there be any field testing that will be conducted to ensure the practicality or operationality of the standards, right? And as well as the availability of the technical resources, right? How are we going to do in terms of capacity building? I'm sure at the moment, a lot of countries having problem with the availability of resources as far as in reporting sustainability, right? And all the data that we're going to obtain from our constitution or being provided or being reported in the sustainability report, right? How are we going to ensure that those data are actually relevant or sufficient enough for reporting? Or can we really rely on those information or those data? Whether the source data is actually can be relied upon, right? And finally, will there be a framework for the third-party verification? Because there will be a linkage between interlink between sustainability report with the financial statements or the IFRS accounting standard, all right? The compliance with the IFRS accounting standard. Will there be a requirement? Would there be an impact, I would say, of the compliance of the third-party verifications on the financial statements?
I think that's
about all.
Those questions.
I have plenty of questions, right? But we will put it in our comment letter once we have compiled the rest from our constitutions as well. So, but as far as Malaysia is concerned, in MSD, we're actually working with some of the regulators and looking at all both the standards that's available, the S1 and S2, right, to ensure that we'll get the whole Malaysian view and share it with you or put it in our comment letter.
Thank you, Yopin. Those questions actually deserve a session on their own, but perhaps Sue and Tim, you could answer it in a nutshell.
Sure. I think we've mentioned that the IASB, we've been having conversations with them, and they've already had frameworks and additional guidance that they've recently published for sustainability reporting. And I think the plan is it's beyond our remit, but we've heard that they are planning to develop that further in order to make it more comprehensive for a third-party verification. And I'd just like to pick your point, so Yok-Bin, on commercial sensitivity, commercial sensitive information there. So I think which is really important, because especially when it comes to value chain information and such like that, then what we're asking in the general requirements is that there is this aggregation and disaggregation, which is similar to IS1. So we're not asking a company to provide commercial sensitive information in their public reports, rather as long as they could use aggregation, disaggregation to present such information in a way that would still convey that information to the users. So I think that's really why we have that aggregation, disaggregation section in the general requirements, precisely to address commercially sensitive information. I think that you have more comments on the timing and where is a practical issues and associates and joint ventures as well, which I think we're going to be thinking about. Sue, do you want to add to that?
Just a couple of points. So thank you. You raised lots of good points there, lots of things for us to think about. Again, if you've got examples when you send us your comment letters in terms of particular industry-based requirements, which you are, wondering if they are sort of applicable for Malaysia, that would be really helpful for our internationalization exercise. Commercial sensitivity, that's an interesting one. Obviously, we've got to get the balance right between the information that investors need so that they aren't investing, blind, which is not a good thing relative to the commercial sensitivity. So we've got to get that balance right. So your help on that would be really appreciated. And the last one you asked was on field testing. And at the moment, we're not planning to do field testing because that's a very long, time-consuming exercise. And, people have asked us to be timely, which is why we got the exposure drafts out so quickly. And I think that's okay because, of course, we don't want to rush and then regret. But if you think about it, most of what we've got in these proposals have got heritage. They're not brand new things that the ISSB has come up with. The industry-based requirements have had a lot of companies apply them from the SASB community. The TCFD is very much what we've built. The quantitative and the scenario analysis has come from there. So there's not much in here that's purely novel. What I think we do have, obviously, is a much bigger potential population applying it. So we need to be really careful with the capacity building and the proportionality, but it's not unique. So I think that is helpful in that regard. And I think that's important.
Great. Thank you very much. So we've got a lot of good comments, a lot of good questions, but we're running out of time. So can I ask Ibu Elvia, Kunorachai, and Maria to just state the most important points that haven't been stated yet in a minute each, and then we'll just get Sue and Tim to wrap this up for us. Can I start with Ibu Elvia, please?
Thank you. Thank you for the time. So hello, everyone. So let me introduce myself very quick one. I'm a member of the Comprehensive Corporate Reporting, or abbreviated as CCR, the Task Force for the Institute of Indonesia Chartered of Accountants, and member for the Indonesian Accounting Standard Board. At this time, our CCR task force are still discussing and gathering some input to provide comments later to the draft. Hence, what I'm about to deliver here is my own opinion and doesn't represent the positions of CCR because I'm an academia that I did a lot of research. I did a lot of discussions with the stakeholders, constituents. So regarding the draft, I do have 3 points to discuss. The first one is related to S1, S2, and this is something to do outside the S1 and S2, which I would like to give comments. So basically, with regard to the definitions provided on risks and opportunities, from the view of the preparers and the users of sustainability reporting, knowing that there are also many different types of users of financial reporting or investors of financial reporting, this is something that I would really like to get a lot of clarifications in terms of how we define risks and how we define opportunities. Also, the definitions on enterprise value. So what value are we talking about? And is it from the view of the preparers? Is it from the view of investors? If it is from the view of investors, which investors are we talking about? So this needs a lot of a kind of like trainings, a lot of, like harmonizing the perceptions among regulators, among the standard setters, among the constituents, stakeholders with regard to that risk, opportunities, and also regarding the definitions on the enterprise value. I'm also talking about the same matter, same issues for S1 and S2 regarding to the climate change. Another one is something to do with the supply chain. So in that perspective of supply chains, that the entity must clearly identify the impact towards the use of resources along its value chains first, before they can have an assessment on the sustainability related issues. So they have to define what is going to be the impact on the value chains, and then they can define what are going to be the impact on the sustainability related risks. So that is something that I really would like to raise both for the S1 and S2. Another one is about the measurements, how we disclose this quantitative or qualitative. I believe that this has to be a mix between quantitative and qualitative. Both are important for us to disclose this to our readers. Outside S1 and S2, in the spirit of interconnectedness between financial reporting, sustainability reporting, I would like to also ask about the IFRS practice statement of management commentary that will complement the IFRS S1 and S2. How does it work between the three of them in the future? And that's it. That's what I want to say. Thank you for the opportunity.
Thank you, Belvia. And if I can ask Kun Norachai to share his views too, quickly.
Okay, I will make it short. Can you hear me?
Yes,
Hello?
we hear you. Thank you.
Okay. After we read both drafts, firstly, we think in the preparer view, we would like the scope of this disclosure to have the exception such like what we have in the IFRS 10. Like if our ultimate parent already disposed this information and our instrument is not traded in the market, we don't have to prepare this disclosure since after our ultimate parent already disposed it, just like the IFRS 10. Yes, and the secondly, we would like to make sure that ISSB clearly set the criteria for company who has activity in many industry. The criteria would be like if you have 10%, at least 10% asset in this industry, or if you have at least 10% revenue in this industry, you have to apply those metrics. That's all our comment.
Thank you. At this point, I think Sue has to leave. She has a hard stop. So Sue, thank you so much for being with us. I'm sure Tim will be able to carry the mantle.
I'm sure he will, more than capable. I'd just like to say thank you so much. You've really raised some fantastic points. I've been writing lots and lots of notes. I'm going to send an email to the staff this afternoon. So thank you so much for all your really valuable comments. I think really interesting perspectives, and I'm really looking forward to continuing our conversation on these documents, but also with the journey ahead of us all. So delighted to be part of this event and really looking forward to the future interactions as well. Thank you so much, everybody.
Thank you, Sue. I'd just like to invite Maria as well to give her comments. Maria is a practitioner.
Yep, thanks, Eugene. And it's been very insightful to hear from the rest of the panelists. In favor of keeping this short, I'm not going to belabor any of the other points. I think from Singapore's point of view, and also from the clients we work with, the main concerns that people have are that we are now on the path to implementing TCFD in Singapore. So for us, GRI and TCFD seem to be the main components of our sustainability reporting, and therefore our companies are more concerned about how is this going to dovetail in with the ISSB, because we also believe that integrating it more with the financial statements is definitely the direction in which to go. So some things that have been useful in Singapore would be like the exchange proposing a phased approach. In year one, you do a part of the reporting, and therefore you take baby steps towards full compliance. And the other one that we would like to see are also maybe something like S1 and S2, but for an SME perspective, the first step that people could do. So this would be something that's suitable for smaller enterprises who are maybe just starting out on the sustainability reporting journey, rather than something like S1 and S2, which may be very daunting for a reporter who's not too mature yet. So that's our key point.
Thank you so much.
Yeah.
So Tim, over to you.
I don't know, Eugene, we've got lots of questions. Do you want me to try to respond to them, or perhaps you could...
might suggest that I think there are a lot of good comments. Maybe if you can respond to the key ones, and then for the rest, I'd suggest that the panelists put that into their comment letters, because those are really, really strong comments.
Sure. Yeah, and I think it might be useful, since that we're hearing lots of views already, and clearly you've looked at the EDs in much detail, and you've developed those really useful comments. I think if it's not too much to ask, if you could send that information as well, that comments to us, then we could look at it in a more detailed way. And of course, as the comment letter as well would be very much appreciated. Maybe if I start with the comment from Ibu Alvia, so the definition of risk and opportunities, definition of enterprise value. So that's something that we are asking for comments from people as well, whether we've got the right definition. So that's clearly something that we're going to be looking at. From Nora Chai, multiple industries. Again, that's as mentioned previously, that's an area that we're keen to get some feedback on as well. And from Pamela, phase approach, I think that's something that we need to start thinking about really hard now that we've got the EDs, apart from the technical comments that we want, also thinking about how do we get this moving forward.
Thank you very much. So with that, I really wanted to thank Sue and Tim. Really, really insightful. You've managed to cover a lot of ground in a very short time, and certainly all the panelists as well. I know all the questions are very relevant to all of us. They're very interesting, and some haven't been answered. Please do feel to put them in the comment letters. We just simply don't have the time to address all of them. Thank you very much once again, and if I can hand it back to Oki. Thank you, Oki.
Yes, and thank you, Eugene, for that excellent moderating of the session. And obviously, thank you, Sue and Patim, for your responses. It's certainly encouraging for all to see your passion in your every response. Plenty of important takeaways, obviously, that we can bring back for our discussion with our respective stakeholders, and of course, to help us in preparing our comments to the drafts. And panelists, participants, thank you very much for sharing with us your question and comments. And Patim, plenty of questions. Perhaps one of the things that we can do after this, we can work together to try to answer some of those questions. AFA will be very happy to share these responses with our audience and also with our stakeholders. So happy to follow this up after this session, Patim. Ladies and gentlemen, to conclude our session, we are honored to have with us today IFRS Foundation Trustee, Mr. Masamichi Kono, who will deliver his concluding address. Masa Kono and the trustees have been working very hard, especially in the last year, towards establishment of the ISSB. Kono-san, it's good to see you again, and apologies for the slight delay.
Thank you so much. My great pleasure and honor to be here, and I really want to thank you, the organizers, Oki, everyone, for this excellent and particularly useful and timely event. Well, I mean, you heard that the ISSB is set to deliver its first set of standards by the end of the year, and also planning to launch a consultation later this year to determine the next priorities for the development of standards after climate. So please do send in your comments now, and of course for the second consultation later in the year. And of course, please be as specific as possible so that our teams can really work on them to make for a better standard, or certainly a more inclusive and functioning set of standards for the ISSB. And well, worked at the OECD until last October, and I've already always emphasized that sustainable development and the decarbonization of the economy and society do not have to be considered a trade-off, and that growth and decarbonization can be achieved in parallel by making the best use of private capital to significantly increase the investment necessary for decarbonization. And finance for innovation is also critical for both growth and decarbonization. So we should not forget this when, of course, we are working on those standards as well. And of course, to have private capital flow properly. Definitely the investors do need sound data and appropriate information. And there was, I think, a reference to credibility of the information provided in order to correctly assess enterprise value and obtain information about the longer term risks and opportunities. That's also important, that companies are facing or companies can foresee in their business activities and be able to adjust accordingly. Now, so disclosure of sustainability information is really a key infrastructure for capital markets. And while some progress has been made in recent years, the challenge is huge and urgent, and it is really now. And as mentioned by many speakers, the huge importance of the work of the ISSB and the complexity of this work cannot be overstated. And well, you know that this work has been repeatedly encouraged by the G20 ministers, as well as global investors, the whole range of stakeholders. And it was particularly encouraging today to hear lots of voices in support of the general direction, but then we will have to really flesh out the detail. That is all in the interest of course, achieving the SDGs. And this is a global challenge requiring globally coordinated efforts. And certainly we need to strengthen global cooperation. Despite the odds now, we need to work closely together to address those issues urgently. And in terms of achieving the SDGs and also in enhancing ESG investments, the Asia-Pacific region is key to global success. And we heard many encouraging voices today again that there is momentum in the region in enhancing sustainable finance and in developing the infrastructure. But we don't want those standards to be inconsistent or incompatible with the global baseline that the ISSB is developing. So the all-important point is that we need to have the region's voice heard and reflected as appropriate in the standard setting of the ISSB. And the newly established ISSB is adopting a multi-location model from the perspective of setting global standards, and will have its main seat in Frankfurt in North America. And in North America, it has been decided to establish a regional base in Montreal and a technical base in San Francisco. But the location in the Asia Pacific is at the moment still not completely decided. There is an office in Tokyo, which will be supporting the work of the ISSB, but at the same time, Beijing has also stepped forward, and there may be other expressions of interest. And I think Asia is so diverse, such a large region that we can afford to have multiple offices. But again, the importance is that you are closely connected to those locations, and also, of course, to the whole standard setting process, so that your voices are heard. And I really would like to contribute to helping create a system in which each geographical region, each profession, each interest of stakeholders is properly heard and as appropriate reflected in the standard setting as well as their implementation. And we did discuss a lot about implementation today, and there again, well, globally, more work is needed. So in the end, I think it will be important that stakeholders in the Asia Pacific gain a sense of ownership, a sense of participation in the standard setting that we're doing. And so with that, I would like to finish my remarks, but I would like to really thank you for your continued understanding, your cooperation, your strong interest in the work, and your active participation today. And your ideas, your suggestions, your proposals, all are most appreciated in this process. And please do not hesitate to ask for more information and to find ways to discuss further. Of course, if there are any opportunities to deepen the discussion today, that will be again most welcome. And thank you all, and all the best for your efforts. Thank you very much.
Thank you, Kono-san, for the excellent address, fitting conclusion to our session today. And once again, we appreciate your time and participation today. Thank you, Kono-san. Ladies and gentlemen, that concludes our webinar today. I certainly hope that you find the sharing and discussion useful, particularly for your sustainability learning journey. And for those of you asking about recording of this session, we will keep you posted. So make sure you're following our social media accounts to get the latest updates. And going back to the very objective of today's webinar, I would like to once again, as what Kono-san has mentioned in his address, urge you to have a look at the draft if you haven't already. Engage with your local stakeholders and come up with feedback drafts. So it is important for the voice of the stakeholders in ASEAN, Asia, Oceania to be heard and to be considered in these consultations. And this consultation is an important opportunity for us to be heard and represented. Ladies and gentlemen, on behalf of the organizers, I would like to thank once again President Furawit Chantanakul of AFA, Chair Nishan Fernando of the AOSSG, Chair Emmanuel Faber of the ISSB, Mr. Masamichi Kono of the IFRS Foundation, our presenters, of course, Ms. Sue Lloyd and Mr. Tim Kasim of the ISSB, and of course, our moderator, Mr. Eugene Wong. Thank you as well to our excellent panelists from the region. And last but definitely not least, our audience today, who has been very active in your participation in our discussion. My name is Auke Pratama of AFA. Stay safe, take care, and thank you. Thank you very much, everyone.